Congratulations, first surplus in 15 years, so it's an historic moment. And you've had to be very careful here in terms of addressing cost of living pressure. For example, there's some support for energy bills there, $1.5 billion to be matched by states and territories. But at the same time, $1 not spent on energy is probably $1 spent somewhere else. How can you be confident that these measures aren't going to push up inflation?
Yeah, thanks for having me on. Look, we've been dealing with the inflation challenge has been front and centre in our budget considerations. Clearly, we don't want to make the inflation problem worse. We're very mindful of that in the decisions, but we had to range up a whole range of balancing priorities, to be honest, in this budget. And the budget is, I guess, hundreds, if not thousands, of decisions that seeks to manage the inflation challenge, does what we can where we can on cost of living, so invest in opportunities in the future and repair the budget at the same time. And I think that's what the budget the Treasurer handed down last night did. We do have big improvements in the budget bottom line, but that's because we've banked a lot of the upward revisions in revenue. We think that helps in the dealing with the inflation challenge. And I guess where we have made investments, we've made them in a targeted and calibrated way, and we've done it over a 4-year period.
Mm-hmm. So inflation seems to have peaked at 7% according to the budget, falling to 6% by the June quarter, and then 3.25% the following year. But of course, we have seen, history showing us, that a spanner can get thrown into the works. What are the risks that you anticipate around inflation?
Yeah, well, all of these are forecasts as expected. These align pretty closely with what the bank is considering as well when they've released their updated forecasts. And I think you're right. I mean, a budget has to respond to the economic circumstances of the time. We make those decisions based on the best advice to us from the Treasury and others. They outline what they think the economic outlook's going to be over the forward estimates, and we calibrate decisions. Now, if there's changes to that, as we've seen in recent years, you have to amend your decision making. But based on the information we have and the decisions we've taken in this budget, we're very confident, and the clear advice from Treasury is that our decisions are not adding to inflation. In fact, on the energy price package, which is largely the caps and the direct support for households and businesses, that has a deflationary impact on inflation.
Is there a subtext to this budget as well in terms of sending a message to the Reserve Bank of Australia? OK, that's enough, you can call it on rates now?
Well, we leave the bank to make its own decisions. They are independent, and the review into the Reserve Bank made it clear that we should be strengthening that independence, not challenging it. So this is really, I think, a budget made by government on decisions that we have control over. The Reserve Bank will make decisions themselves. But we've been mindful that, and certainly the forecasts show that the impact of those interest rate increases is, amongst other things, are going to slow GDP in the near term. And so we can see they are impacting on households. Household consumption will be affected. I think we've been mindful of their work. We're making sure that our work doesn't add a problem for them.
In terms of cost of living pressure relief, there's also something here for renters, and of course housing, the rental crisis, front and centre here in Australia at the moment. But the rental relief is $31 a fortnight, so a little more than $15 a week. Is that really going to make a difference when you consider how expensive Sydney, for example, has become? And who's not to say that next week landlords just jack up the rents by that amount and absorb it all?
So again, I think when we're looking at what we've been trying to do in this budget, has been, deciding on a whole range of balancing or landing a whole range of balancing priorities. We know that people are doing it tough with rent, but you can't see the rent in isolation of some of the other increases or in the cost of living payments as well. I would say I hope landlords don't take this opportunity. They see the state of the rental crisis in this country and that they're mindful of that. And we think it'll add some good, additional support. We're not going to pretend that it's going to do everything for people who get Commonwealth rent assistance, but it's the biggest increase in 40 years. We think it was affordable. It's something that the budget could take, and see it in conjunction with some of those other policies like Medicare and like cheaper medicines, for example, which we've also invested in.
Well, your government's been very realistic, almost conservative about saying, hey, this surplus probably a one-off, deficit's coming, and there are some big expenses coming as well, like the National Disability Insurance Scheme, nuclear submarines. What's being done on the revenue side to bring in more revenue?
Well, this budget has a couple of areas where we have increased revenue, so on the PRRT, on multinational tax and in high balance super accounts. So we think these will make a meaningful difference, particularly over the medium term. For super, for example, doesn't assist so much in the forward estimates, but it does continue to grow in the outside the forward estimates. So we've done what we can there, but this was one budget in one point in time. We've looked at how we can show spending restraint, assist the budget with budget repair, make some of those investments in cost of living, and do look at some of the opportunities for growth, and particularly in the energy transition. But it is one budget. The work is never finished.